they will be margin accretive. There has been strategic focus and decent demand from LFS, RCS, e-commerce as well as D2C. Thank you. So with this, we can take the questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. In order to ensure that management is able to answer queries from all participants, please restrict to 2 questions at a time. You may join back the queue for follow-up questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We'll take our first question from the line of Manoj Gori from Equirus Capital. Please go ahead.
Yeah, thanks for the opportunity. So based on your opening remarks, what I understood is optically this quarter is looking weak on the domestic front, but probably there will be a lot of spillover into Q4. So probably for the fourth quarter, we should expect normal growth that we would have expected earlier, and plus this spillover effect. Is that understanding correct?
That's right.
Yeah. And secondly, if I look at the some of the other cooling product categories, channel has been going very aggressive. So in fact, in terms of number of days or in terms of absolute volumes, they have been betting on the summer, building huge inventories in anticipation probably if there is any supply chain disruption for any of the category. So are we seeing like probably channel going very aggressive as compared to previous historical trends, and accordingly it should further boost volumes during the quarter?
Certainly, not only the channel, but so are we. We've also built a huge inventory in anticipation of good sales in the summer. So yes, all in all, everyone concerned in the business is very upbeat.
Correct, sir. Good to hear that. So second, lastly, Rupesh bhai just said like the new models are margin accretive. So looking at the standalone gross margins, probably there has been minor contraction. So probably there won't be any major contribution from these new models during this current quarter, and that we should expect during the fourth quarter.
That's correct. Yes.
And we as a company have a focus when we talk about margin on EBITDA margin. So don't mistake it or club it with gross margin or otherwise, because primarily our focus is on that.
Correct. Understood. And so lastly, on the subsidiaries, probably still when we look at the top line performance, so we are still not able to see any meaningful uptick over there. Obviously, you have taken a lot of efforts on CODB, where we are able to see some benefit kicking in. Can you throw some light on these subsidiaries? Probably how do we see from next 1 year point of view?
So Manoj, by subsidiaries, I suppose you mean Climate Technologies of Australia, because Inco Mexico and GSK in China are already sort of cruising along very well. Yeah. So as far as Climate Technologies is concerned, there were 2 sort of levers that we were working on. One was how do we reduce the cost of doing business through a transformation of its business, which is outsourcing the manufacturing, and cutting down its overheads, manufacturing related overheads. That has been by and large achieved. So the manufacturing is at the tail end in Australia. By June, everything will be wrapped up. That's when the lease for our factory also expires, and we'll be done and dusted with any sort of manufacturing in Australia come June. Simultaneously, the other sort of lever that we have been working on is adding new products to expanding our product portfolio in Australia, because historically we were selling gas heaters, gas ducted heaters, and rooftop mounted air coolers. Now, over and above that, we have added high wall split air conditioners. We have also added reverse cycle ducted air conditioners. By reverse cycle ducted air conditioners, I mean air conditioners which both cool and heat. Because remember that Australia is as hot as it gets cold in the winters. It gets very hot in the summer, and it also gets cold in the winters. So it requires both sorts of interventions. So we have introduced the complete range of air conditioners. We've also added products like electric panel heaters, fireplaces, strip heaters. We are in the process of adding air purifiers. So we are really increasing the entire portfolio of products that we are, we'll be selling in Australia. And now the introduction of these products is more or less in place. And now, scaling up the entire business, offering them to the entire geography all over the country, offering them to all customers is a process which is currently underway. But identifying the right products, getting them certified, identifying the suppliers, and then getting the product certified, testing, sampling, all that is all done. Now it's just a question of how do we ramp up sales. So the focus here onwards is going to be entirely on the growth of the top line. Whatever had to be done by the Australian team in terms of reduction of the CODB and its manufacturing transformation is almost all done. And like I said, and the focus is now clearly on ramping up sales. So the issue now in Australia is nothing other than top line. As soon as the top line, if we are able to crank up the top line, everything else, all the numbers will immediately fall into place. Exactly what happened in GSK China. Till last year, our turnover was some 33 crores and some barely breaking even on a cash basis. And suddenly, as soon as the top line increased to 70 crores in 9 months, we are seeing bottom line growth. So the operating leverage has kicked in China, and the same thing will happen in Australia. So that is what is currently going on.
Correct, sir. So thank you, sir, and wish you all the best.
Thank you. However, I may also add that, as Lokesh bhai mentioned, we fully appreciate the sort of concerns that the market has about this subsidiary and its performance and its consequent impact on the valuations of the company as a whole. And we will certainly take all that into consideration and chart out the way forward.
Right, sir. Thank you, sir.
Okay, thank you.
Thank you. We'll take our next question from the line of Pulkit Patni from Goldman Sachs. Please go ahead.
Sir, thank you for taking my question. Sir, can you highlight in a scenario that there is tariff imposed on Mexico, China, do we get impacted in any way? Do any of these products directly, indirectly make their way into the U.S.? We know Australia does supply to U.S. Does Mexico also do? If you could just tell us, one, if there is an impact, and second, if there is, how are you looking at navigating the same?
again, good question, Pulkit. Until about a couple of years ago, two summers ago, we used to have very good business in the U.S. At the peak, we did about $23 million of sales, of US dollar sales in the U.S. Now, for different reasons, that has not happened in the last 2 years, and that is also has a telling effect on Climate Technologies sales. So as of now, our sales from either Australia or Mexico or China to the US is fairly low. Whatever the US company sells does come from all of these geographies, but as of now it's fairly low. So really speaking, the tariff will have no impact on us. In fact, if there is sales in the U.S., we believe that the tariffs will be passed on to the consumer. If, for example, Home Depot sells our product, places orders on us for our product, we would certainly, they would pay duties, or we would add the duties to the price at which we sell to them. So, if at all it will get passed on to the U.S. consumer, as far as we are concerned, really nothing changes.
And sir, if I may flip that more on the positive side, that tomorrow, in a scenario that China and Mexico have duties, can the Australian subsidiary become more relevant for us from a US export perspective?
Absolutely, yes, absolutely. Because there would be no duties from Australia to the US as they currently are not. So absolutely right, yes. So we do have that other avenue of routing product to the US. You are absolutely right.
Yes, but on an as-is basis, if duties are put, we don't get hit significantly negatively. That's really what I take away from this.
Absolutely, certainly not. Although there has the impact that this entire turmoil in the US has had on currencies is something what is affecting us indirectly, as was explained in the presentation. That the Brazilian real has devalued, the Mexican peso has devalued, the Indian rupee has devalued. So whatever impact that has, is there. But other than that, directly the tariff has not hurt us, or we don't expect it to hurt us.
Sure. So my second question is, a lot of these EMS companies which originally used to do, air conditioner, etc., are now also talking about doing air cooler EMS. Does it in any way play into our strategy of looking at, incremental suppliers, or for us, the business model of sourcing will remain the same the way it has been for years?
Sorry, Pulkit, I'm trying to understand what you meant by EMS. So
the likes of EPAC, etc., who are now making air coolers for different brands, and as you'd appreciate, multiple brands now want to get into air coolers. I wanted to know if for us, from a sourcing perspective, could they be relevant suppliers, or we will stick to our existing strategy of sourcing, which is basically we do all the designing and then stick to the few players who do manufacturing for us?
Essentially, we will stick to what we are doing now, but EPAC has also become one of our OEMs, contract manufacturers. So products that we have designed and developed, and the molds of which are owned by Symphony, have been given for a few models to EPAC to produce on our behalf. So we will, not really just source a product which has not been developed by us and where we see no product differentiation, and where the same product would be hawked to different brands is not something. It's not a direction that we will go into.
Got it, sir. Very clear. Thank you, and good luck for the next quarter.
Thank you.
Thank you. We'll take our next question from the line of Shraddha Kapadia from Share India. Please go ahead.
Thank you so much for the opportunity.
Shraddha, can you use your handset mode, please? Your voice is not very clear.
Is this better? Hello?
Your volume is low. If you can speak a bit louder, that will do.
Hello? Is this better?
Yes, Shraddha, go ahead, please.
Yeah. So basically, I wanted to understand if we have taken any price hikes or do we expect to take any price hikes in future? So in the current quarter, if we have taken any price hikes, and what would be the price hikes considering the season is almost over here?
Yeah. So again, good question, Shraddha. As a part of our overall, pricing policy, our prices keep on sort of inching up every fortnight, beginning July all the way up to the summer season. So that has been part of our the long-standing pricing policy. So yes, and the price what I'm referring to is the price at which Symphony sells to its channel partners. So in the first fortnight of February, the rate that we will offer is not what the channel would get on the 16th of February.
Shraddha, does that answer your question?
Yeah, thank you so much. I just have one more question regarding the new 17 air coolers which we have launched. If you could highlight the new features and how much revenue can we expect? So majorly it would be the new features which would be there. If you could highlight the same for the upcoming season.
That would be a very long story. And it's all there in our corporate presentation, which is on our website. So if you care to go through that, that will probably serve you better than me talking to you on the phone.
Okay, sir. Okay, sure, I'll do that. Thank you so much.
Thank you.
Thank you.
And all the best for the upcoming quarter.
Thank you.
We'll take our next question from the line of Mayur Parkeria from Wealth Managers India Private Limited. Please go ahead.
Good evening, sir. Good evening to the management team. Sir, actually, yeah. Sir, we understand that this event of provision was there, and it has happened one-off situation in that way. But my question is slightly little longish and slightly more strategic. Modern trade as well as e-commerce or even quick commerce, and this is what other brands and OEMs also have been saying, that the working capital or they have a credit period unlike our bargaining capacity in terms of general trade being higher. Versus in front of them, and it is relatively lower, and hence the credit periods are also there. And the structural change is that their share in the overall sales is rising in that sense, gradually over multiple years, and it will continue to rise given the consumer behavior and experience on modern trade, e-commerce, quick commerce, all put together the new channels. So how would you address this assessment that credit which has been, we have always stick to the cash and carry model as far as the general trade is there, but then we are giving credit on the other channels, and on one side as a structural impact, and the second is our credit and our assessment in the credit profile and the measures which we have taken now. Where do you think the lapse actually happened in terms of internal assessment, in terms of internal situations, if any, and where did we miss that in that? Because we were supposed to be, we have always maintained that we are very strong on that, and we have maintained that. So just as an learning curve perspective, where did the internal process missed, and are there any heads which rolled out because of this, or what kind of measures did we miss on that side, and how do we address the structural issue of credit, which anyways this channel we will have to continue, sir?
So, when it comes to modern trade, you're talking about the likes of Chroma or Reliance or Vijay Sales, or when it comes to regional chain stores, you're talking about the likes of Bajaj Electronics down in Hyderabad or Aditya Vision in Bihar, and there are several in the south, Tamil Nadu, and so on and so forth. We have been giving credit, and There, of course, we've obviously looked at the financials. You can't look at financials of, no point in looking at the financials of Reliance Retail or of Chroma. But for all the others, we do keep a eye on the financials of the other parties. As far as this one particular case is concerned, we had been doing business with this distributor for a long time. Initially, it was not on credit. Gradually, because to sort of increase the sales, we began to provide credit. But historically, we kept a close eye on how the sort of the repayment was happening, but in this 1 year, I think I can admit to saying that there was a lapse in judgment, and we should have picked up the signals. People who are at the operating level who do the business should have picked up the signals and been able to sort of tighten the sales. But sometimes in the lure of sales or with the fear of not losing sales, they sometimes tend to overlook some signals which would have been otherwise very evident, and I think this situation has happened. So it is clearly a lapse of judgment, and as to your question about heads have rolled or not, no, heads have not rolled, and we believe that the people who have made this who are responsible for this lapse in judgment are wiser now, and this will not happen again, so yeah.
Sir, actually 45 crores and even earlier what we provide is a huge sum in terms of time, the kind of credit. It's just that Achal Bhai's philosophy of cash and carry. I remember earlier days you had faced this issue very long time back, 2 decades back or something, and that what made you to stick to cash and carry, and that philosophy we have always been looking at, and it was while we understand it was an event, but coming from Symphony was something which took us too much of a surprise in terms of that. So hope that philosophy. Yes, sir.
Yes, Mayur, I entirely agree with you. All in all, it's 56 plus whatever provisions we have taken earlier. So all in all, it's 58 crores. 46 plus 12, so 58 crores. It's an enormous amount of money. That is something where, for much less, back 20 years ago, we became a BIFR company.
Yes, sir, I remember, sir. Yes.
So this is an enormous amount of money, and under normal circumstances, you are right. This shouldn't have happened, but like I said, it's a lapse in judgment, and so we are sure that whoever is responsible for this, the people responsible for this are wiser now, and this will not happen again. Heads could have rolled. That would have been an easy, simple thing to do, to sort of also even demonstrate to the market that actions have been taken, or to our board. But we have chosen to chosen the other direction of sort of our people learning from this experience. Very, very expensive learning, but a learning nonetheless. So we are hoping that this is something which will not happen again. I mean, we are sure. Yeah, sure.
The investor concern is only actually our long-term concern only comes because the channel share gradually keeps on rising in terms of modern trade and these, and we are at a stage where the assessment on this itself has gone in early stages wrong. So just to ensure and request you to give your personal attention and ensure that processes are well established. While this is a very generalized way to say that there are big players, but there are small and medium modern trade players also which are there, and the likes where we face an issue. So to strengthen and ensure that the processes are well set, because the channel will keep on becoming important as we go ahead. So it's not that we cannot serve that channel, but we need to take care. So the second question is on the climate technologies.
Sorry, Mayur. So just to add to that, so as we covered in the presentation, it has been placed on the screen. So of course it was a valuable lesson, and hence stringent credit risk mitigation has been implemented, which includes in-depth credit evaluation, which is much beyond what used to be done earlier. Secondly, now for entire modern trade, credit insurance has been taken. So for the first time, this credit insurance policy has been taken, and wherever required, we have substantially rationalized the credit limit. And of course, many a times, just by knowing the financials, just by knowing the balance sheet, it's like giving a pulse. But as it was mentioned, sometimes there may be a lure of not losing the sale. And in fact, last year, actually, there was a loss of sale because of non-supply. So had it been rationalized to this channel, otherwise also there would not have been a loss of sale. But of course, it's a valuable lesson. And at the same time, as it was conveyed in the presentation, we have taken stringent actions against the modern trade distributor. And by the way, several other consumer-facing companies have also lost the money with them.
Sir, we believe all the actions will be taken. Sir, second, just
Also in continuation, in the past you must have heard of future retail going under, and many suppliers having lost money. In our case, we didn't, because again there were a different set of people involved at that time, and who sort of exercised judgment and ensured that we did not lose our shirt. So even though many other companies failed to do that, our team was successful in minimizing our exposure to future retail when it was going under. So it's just a matter of, like I said, it's just a matter of judgment, of the people involved.
Yes, a second question on the City Australia. If I remember, if my memory serves well, I think this is the first time where we have, apart from the other actions which anyways we are taking for a couple of years, our strategy phase 1, phase 2, we have mentioned about transforming and all that. But I think first time we have clearly come out with a kind of a statement, or I'll say an outlook, where we are saying that we are ready to open, we are open to any other options also, which may be possible in the light of the investors' concern on Australia. So just to understand this a little bit better, what are we saying? Are we looking at some strategic kind of initiative apart from the other options which are there on the table? Is there something more to it to read in your intent and the way we are looking at it? Because this is a very big event if it happens, and just to get a more idea on that, sir.
No, Mayur, there is nothing really on the table. I mean, in fact, I'm asking you, what do you suggest we should do?
Sir, firstly, it is beyond my pay grade to give a strategic view on something, and especially to Mr. Achal Sukeri, who has been.
You are a smart person. I'm sure you can maybe share your thoughts.
Sir, many times we have mentioned that our intent has been to focus on return on capital employed and margins very clearly. At a very strategic intent level, I remember we were talking about this way back when these acquisitions were taken, that India is the most promising place as far as ROC and growth both were concerned, as a combination of that. But we do understand that air cooling, Australia was a big market. We wanted to address that and possibly also look at US as an play through Australia, which actually did not materialize over long period the way we would have thought over it, right? But then apart from the growth, the ROCs of all developed countries are very, very subpar any which case, right? So I think that is something which all of which needs a very closer look in terms of our intent and how we look at addressing the opportunity, because absolute value of sales can come in, but and invariably when sorry to name, I'm not naming in others, but we have seen experiences whether Tatas have gone through, or for a very long period of time Bharti or Hindal, all of of them have gone through where developed countries or global companies are acquired and their ROCs are significantly lower, and it is very difficult for us to have a cultural map to understand and turn it around in a time period where investor horizons are there, and in fact at this kind of a situation. So you have been instrumental in turning that around by complete closing the manufacturing operations, and normally these are not possible and easy to do. But then ROS was one indicator which actually could have given us a signal whether this was worth doing at that point in time. And now that this has been done, I think while we are taking all measures at the margin, trying to improve it, I think there is still a question which, so one of the participants asked that does the tariff war opens up opportunity for Australia to turn around? But I still think that one has to look at this not from 1 year, but over a 5, 7, 8 years, can we really add wealth to Symphony parent, and then the wealth to the investor will come as a second part. But overall, how does this developed country operations actually fit into that entire efficiency and ROS which we already have? It will always dilute our proposition for that. And ऐसा भी नहीं है कि those markets are growing at very high double digits. So we will have to do completely different. We are doing and launching new products there, which has not been our core focus in other markets. So we are doing measures just to turn that around. Is so much of effort and so much of your time and resources of the company over a long period, one can have a look at that. That's just a small suggestion, way to look at it.
No, really appreciate it. Really appreciate your thoughts. Thank you. Thank you very much.
Thank you, and wish you all the best, sir.
Thank you.
Thank you. We'll take our next question from the line of Vineet Prasad from Investec. Please go ahead.
Hi. Good evening, sir. Thank you for giving the opportunity. I just wanted to get a sense around how are we thinking on water heaters business. What has been the initial feedback which we've gained from the market, particularly given this is the peak season for water heaters. How has it done this month? And also, how are we looking at the overall business in terms of whether this business will continue to invest, maybe in the near term, maybe a drag to our profitability? And lastly, what is the market share target, let's say we're targeting over a medium term, let's say 2 to 3 year perspective?
So in terms of the market for water heaters, it's about as big as coolers in value terms. So it's a significant market, significantly large category. But we do recognize that there are very, very well established, well entrenched players. So we had to make sure that whatever we offer has a distinct differentiation, and which is why we have developed this hair fall control geyser, and with the AI powered controller, and we believe that these two together have a compelling differentiation in the market. When we launched it, it was already well into the cycle, the channel buying cycle, and also we were sort of fairly late. Although the winter hadn't quite set in, but by the time the product was given to the channel, they had already stocked up on other brands. So this really was just more of a trial kind of a year. Now is when, now going forward is when we would be sort of making sure that all the channel partners stock it for the coming winter, the winter of 25, 26.